So I thought there was a really easy, well, I don't want to say easy. We ready to go?
Yep. We're all
I don't want to say easy because trading is not easy. Hey, well, what do you want? Are you going to teach a course? Little volume profile? Some real volume profiles, some futures. So, you know, what I like to do when I think of these stocks, so AXON, give me some descriptive terms. So you're sitting there, we're preparing for the day, and we're thinking about trading AXON, and I think I did say to you guys, you really want to watch every tick in this stock today, because it'll be a really great learning opportunity for you. I think that there are different stages that you go through when you're learning to trade, and learning how to read the tape is something that I recognize that all of the best traders on the desk have developed that skill, all of them, and except one. And it was interesting when we had our guest yesterday about, Alex talked about he would record his screens and then watch back tape of his recorded screens at the most important moments. As you guys know, we have a reading the tape session. I'm sure some of you wonder, why do we have a reading the tape session? I would admit fully that it can be blurry-eyed and bleary at times. I wrote in One Good Trade that a really great thing to do was to record your screens and then watch back a tape of significant moments. And even the guys on the desk who swing trade, you know, so we talked a lot about one of the guys on the desk was very aggressive trading calls yesterday in Tesla, looking for a squeeze. You know, one of the things I didn't say was he got really long, it didn't work, he got out. Got really long, didn't work, he got out. Got really long, he realized he was right, and it really worked. So even guys who are making, you know, medium-term swing trades, who are top traders, and really the one guy who doesn't do this is more of a research trader and does something very, very unique. So it makes sense that, but he can read the tape as well, but he probably doesn't trade that way. But even, you know, even Shark, who a lot of times is swinging these bigger ideas, is, you know, I'm in it, it's not working, I cover it. I'm in it, I've got a core, I don't really like the price that I'm in, I cover some, it goes a little bit higher, now I like the price, let me put more on, now it's coming in and it's working, let me take some off, make some cash flow, goes back up to the price I really want to swing it from, okay, and now I can really take it, it's coming in, I take some profits off. So, you know, even the guys who are swing trading are using their tape reading skills to get in at the best prices. They're using their tape reading skills to quickly admit they're wrong and not take a big loss and then quickly restart. They're using their tape reading skills to make cash flow along the route of their thesis, which is particularly helpful. And so, you know, one of the things that I would highly recommend that you guys do, which we talk about in our training program, is to record your screens and then go back and watch significant moments. And to me, there were two huge significant moments in the stock this morning. What were they? 100% different on the tape. Now, I've been doing this for a long time, but like, you can't miss this. Like, and I'm not going to sit here and suggest that reading the tape is the only signal that you use to trade. Okay, that's not. We don't talk that way. But it is a significant thing. We talk a lot about the desk about developing a thesis, seeing it, and making trades within your playbook and putting all those things together. So if your thesis is, I think AXON is going to go down today, okay, great, that's a thesis. Now I need to see it. Where do I see it on the tape that it's really, really weak? And then what is my play there? What is my trade when I see it that's inside of my playbook? And you put all those together. And, you know, I work with a 7-figure trader outside the U.S., and one of the things that I notice that he does particularly well, and one of the things that I notice when he struggles, is that he anticipates. When he really focuses on seeing the trade, he's a big trader. So he trades a market that's not as, doesn't move as much as our market. So he really does need to see it. You know, that's when he excels. Time and time again, when guys are doing our report cards and send them to Dr. Steenbarger or myself on the desk, the biggest traders, the better traders, we constantly are talking about seeing it. Don't just trade your thesis, see it. Don't get out in front. Don't anticipate. Don't get overconfident. Match your thesis with what you see with the playbook setup. So where there were 2 points in AXON today where I thought you could see trades pretty clearly. Anyone want to take the first? Yes.
The first one was the break of 6.
Okay, there was one before that.
543. 543.
Okay, that's one of them. What's the first one? I'll get back to that. What's the first one you should have saw?
When it goes right below VWAP, about 5 minutes into it, it tries to hit it again and fails.
So it's a battle at 6 off the open.
Yep, right on the open. Okay, stock goes up, goes up, goes up, goes up. I mean, just a tremendous amount of selling at 6. I don't think it really wicked above 6. It didn't. 603 was the top. Oh, that was the word. It could not trade above 6. So it was going up, going up, going up, going up. And then on the offer, 6 was selling so much more than any other point, and it could not trade above it. Anyone who came to the bid at 6 would get hit. You couldn't see a 6 bid hold on the tape. They'd flicker and maybe show you the offer a little bit, but immediately 6 could never come to the bid, absorb stock. There was a lot more selling at 6. It repeated, it refreshed, and that was your first moment. I have a thesis that AXON is a crap stock. It's up too much. It should go down. Yesterday was nonsense. It's going to go back to whatever. That's my thesis. At 6, I see it. Okay, and my trade for that is a fade trade. And I trade my fade trade. That's trading. That's trading right there. That's really good. I can be a big fucking trader with lots of size and be a really consistent, big dog trader. That's real trading. That's real active trading. And, you know, there were guys that hit that pretty hard. Swang hit that pretty hard, made 10 grand like that. Okay? Swang, Shark hit that pretty hard, made some decent money. I think Swang hit it the hardest and the best of anyone that I saw. You know, just, you know, hitting the crap out of it. All right, so it goes in, and, you know, one thing you notice is it just can't trade below 630. So one of the patterns is, you know, look, this is a gap up, it runs up, it finds resistance at 6, it trades below VWAP. Does that mean that from that pattern of the failure at 6, that it is going to reverse on the day and trade to low of day? Okay, that is a pattern that it could have had, but there's another pattern that can also develop as well. And you'll see this a lot on day 2 trades, which is they show you the weakness, they do a lot of volume below VWAP, they show you prices that it can't get below, and they trap shorts. And you know, I thought at 645 on the tape, that was where, and that was what you were talking about. At 545. 545, thank you. 545 on the tape. That was where you ought to have noticed people were caught short. There were people that were shorting that thing, waiting for it to, you know, people look at 645, people are like, oh, it had a really big down move. This thing is crap. It's holding below VWAP. There's a lot, it's for 15 cents from the low. There's a lot of people shorting it here. You know, I'm going to get in here. I may miss the trade overall. I'm going to short it, and you can see it. And and then people shorted some more at 50 cents, and they were just getting trapped. And it's particularly below VWAP, because like people want to short things that are holding below VWAP, right? And so it wasn't going down, it wasn't going down, wasn't going down. I mean, I think you didn't need to do much other than swing that from there with a stop below 30 cents. That is a legitimate trade to see that. Now, it goes up, and it goes up, and I think it gets a little confusing into that up move, because what's that right there at 590? So you buy it at 545, and it goes up, and what do you see there? Like, what is that? It's a lower high, right, against 6? So I think that gets really confusing, because people are like, oh, let me short the lower high, or people who are long are like, I don't know if I should hold it because it made a lower high. It pulls in, it pulls back into where? Pulls right to that level where people got trapped from, right to it. Pulls right into that. And so, yeah, I think when we push below at 1030, when we push below that high, I think like right when it goes all the way up and pushes above that high at that previous high right there at 950, gets above that high, I think you pretty much know handwriting's on the wall. They're going to figure out a way to get this through 6 and get some people to cover. And so I actually traded this actively, but when I saw that, I bought that. I had bids in to just buy the pull-in, and then I wanted to sell it through 6. I sold most of it. I sold some at 20 cents, thought it was heavy, I bought it back. I sold some at 40 cents. I sold some at 49 cents. I'm holding a little bit. I think that I thought it was heavy at 650. I think being short there, is not the worst thing in the world. But I felt like it was going to go to 7, and there's not necessarily a right answer for some of these things. There's sort of a target for where you think something can go to, but I don't see any reason to be short it yet for me. But I can kind of understand a little bit of a short against 650, because it was just so heavy. It was 620, 625 was so heavy. But anyway, I got long into that last pullback. I did short. I did short that 6. I did get long that 45 cents, but I sold it into that up move, and then I got back in it. So I'm a little bit long. We'll sort of see what's going to happen. I want a little bit more information up here to try and figure out what to do. But a really good trading stock, lots to learn. Let's type out Qs. QQQ. So QQQ did really strong breakout yesterday. I was watching the Qs on the open. When we broke above VWAP there pretty early, I got long above 60 cents, and I set a stop for 44 cents. Get line 60 cents. Yep. And so when we got above VWAP, I got long and thought we would just potentially run. I did look at tick. Tick was not helpful. We weren't seeing a ton of moves to the upside. I did look at SPY. SPY was following through to the upside as well. That was on my favor. It was in my favor. I did look at the advanced decline line, $ADD. That was in my favor. You want to look at some of the FANG stocks to see how they're doing overall. I just wasn't getting a ton from tick. I set a tight stop. I got stopped out below 44 cents for Qs. So I gave it a run. It wasn't really going up. I risked, a little bit, took it off when it wasn't working. Wanted to actually short. See, there's that down move there, a pretty big down move. I think it's hard to go from long to flat to short. I think you got to save that for specific scenarios. But I did want to short the up move after it had that down move right there. I think, Matt, you and I were talking about that. When it had that down move through the whole number, and it was a pretty strong down move, and it had that down move on volume, tick, again, wasn't great. We weren't getting like negative 800 ticks, but we were getting some negative 400 ticks, and advanced decline was coming in. That was a pretty big move away from price. We got some volume confirmation. I did put some up to short at 29, 34, 39, 49 for Qs, and sort of piece into a swing short for that. I didn't get that price, and I didn't get a good price, so I left it alone. And I think that, you know, that's stuff you'll work on. I did miss out on that loan to the downside, but I didn't get my price. We talk about fighting for price, and I didn't get my price, so I left it alone. What else are we trading?
There was Smucker's SJM.
Yes, I traded that.
That was kind of a mess.
Yeah, that was good long. So I shorted that at 98.75. It couldn't hold VWAP. When it couldn't hold VWAP anymore, you see right there, it's starting to roll over, that rollover pattern right there. Started to short it right there. Had that tough red candle down to the downside just before 10 o'clock. Can you show that, Matt? That tough, yeah, so then it goes back up. I started watching it and starts to roll over below VWAP. That's a rollover pattern. You get that deep red candle to the downside, not confirmed by volume, and not for a $100 stock, not the biggest deep red candle you ever see, but a deep red candle below VWAP, one of the bigger candles you're looking at, and a negative thesis for me on this. And so I'm not really able to trade much above 99.25. So that rollover pattern, I start to short some, not too much, and was looking for a place to add, but I didn't really find a place to add because I wasn't really seeing a lot of volume coming in. I didn't really see any deep down moves to add to my initial tier one. I had to stop at 99.26. I got stopped out, and it exploded. I had a great cover. In 99.26, I lost very little on that position. I felt like I could really capture a big move. It didn't get long, but you certainly could have thought about getting long when it got above that 99.26. You just have to figure out how you cover it. I think that pull-in is probably the best. When I look back on it, that pull-in right there, you get the push away. Again, not great on volume. The pull-in is pretty on light volume. But, you know, I don't know. I don't know if that's even a good long. Anyway, I gave it a run on the short side. What else were we trading?
VKTX and MDGL.
Yeah, so, Matt, thanks for calling this out. So MDGL got real weak. Yeah, MDGL, you know, had a really tough down move. When this went up a bunch recently, is it VKK? What is it? The
VKTX.
VKTX. That went up in sympathy, and so when MDGL comes off a bunch, thought process is, hey, maybe this will come off a little bit as well. So let's just take a look at that one. I'll show you how I shorted that. So you can see it has that really tough down move from that 980 consolidation area, from 935 to 945. It has that really tough down move to the 35-cent area. MDGL is really coming off hard, and so you know, and I'm thinking of this trade as a sympathy play. If MDGL should go down, this will go down as well. I missed that move to the downside. Actually, Matt alerted me to this and told me I took a look at MDGL, saw how weak it was. I took a look at this stock and saw how it had a down move as well. And what I did is I looked where it failed from last, and I looked where VWAP was, and I wanted to be short. And I just started shorting piece by piece into the up move. So I shorted a little bit to get a taste of it in the 50s, and then I shorted 59, 69, 74. I was up at 79. I don't remember if I got 79. I think I just missed 79. And what I'm doing is I'm scaling into the position into where it broke down from. So I really kind of want to get it towards that 79, 80-ish area, and I'm scaling into that. So I'm not sure how much it's going to go up to, and I'm trading other things, so I don't really want to watch it that closely, but I'm going to scale into that. I'm going to cover above 10, and I'm going to try and see if I can see a turn up towards that 84, 80-ish, VWAP-ish area. So I have an alert up there at like 85, about 84 cents. So I have all my offers stacked up into it. I have automatic covers above 10, and I'm waiting for that turn area where I can really sink my teeth into it to add to what I'm piecing into it. I wasn't able to add into it very much because I never saw that turn, but I did get into a position. And then we talked about this, about how you want to start to make profits into the path of your thesis. So my thesis is short. My pattern is taking that congestion area and shorting into that price. And I'm still watching MDGL to see how it's doing. It was still performing poorly. And so I'm shorting into that. And then I'm taking off half of what I add into it to make some cash flow. And I'm going to hold the rest until I really see something. So I'm shorting and I'm taking some off into the 50s, making some cash flow. And then at 9:30, it wasn't really going down anymore. And I didn't really like the volume. It kind of dried up. I had trouble actually getting out at 9:26 once. And so I got flat. I got flat at 9:26, 9:31, 9:31. 1/3 of my position size for all. And then I sort of left it alone and thought I'd reset. But that's a good example of using a level of failure to start to get in, and then making cash flow, and then finding a reason to sort of get out of it.
I have a question.
Yeah.
When you scale in on the up move, do you use the same tier size all the time, or do you increase the tier size when you take shorts on the higher price?
So I'll decide how much I want to get into it, and I will save more size for the top. And then I will certainly put on a lot more size when I see it turn. So I'm going to scale in a little bit in 50 cents, a little bit more at 59 cents, a little bit more at 69 cents, a little bit more at 74 cents, a little bit more at 79 cents. And then if it turns, that's what I'm really looking for. And then I'll just take it off into where I think I can get some bids. And to me, there were some stacked bids at 50 cents, so I just sort of took it into 56, 53. And then I didn't like the way it looked at 9:30, so I took it off.
Twitter was another one.
Twitter's been weak at 40 for the last. If you go take a look at a 2-day chart, 40 has been a massive resistance level. 39.50 has been a level as well. There was a big volume bar that came in just before it got below. So the levels are 40 and 39.50, but really having trouble at 40. If you look at your 2-day chart, and 39.50 was support. And if you're watching that closely, do we have the volume on this? If you're watching this closely, there was a big volume bar that just came in to the downside before it got below 50 cents. You can see it come in. I forget what time it was. It really came in on our 1 minute and got me really thinking. And Thomas has been watching this 39.50 area.
I think this was.
Yeah, but that was after it. I remember seeing something, and when we look back on it, it's not as pronounced for some reason. There was 10:04. Yeah, it was around there, and that could have been it. That could have been it. And then you have that 39.50, but because the volume was spiking into the level, they were really hitting the bids pretty hard. It was pretty clear it was going to get below there. And Qs are rolling over a little bit. So that was interesting. Longer term, this is really strong. So this is just a pull-in trade. This is not a short it and forget it. I think maybe shorting, trying to figure out how to short that against 40 was probably the better idea when you saw some softness in the Qs. Maybe adding a little bit to 50 cents for a scalp, and I probably would take it off at 80 cents, maybe even 90 cents. I think a little bit below the whole number, I probably would have taken it off. All right. Any thoughts, Dr. Steenbarger, on the day?
Any thoughts on the day? Well, I'll just mention a little thing. By the way, your earlier examples, it was a great example of how managing the position is every bit as important to the profitability as the idea itself. The way you scaled in, the way you scale out, how you manage the trade is hugely, hugely important. That idea of getting cash flow built into the trade, it starts to go your way. You're taking a little piece off, taking a little piece off, making a little money, making a little money. That's what I see the successful traders do here. This is really interesting because they're just like hitting bids, hitting bids, hitting bids. Yet normally, this is a big cap stock. Normally, an execution desk at a hedge fund is going to try to execute over time, wait for things to bounce up, and they'll sell a little bit into it, wait for it to bounce up, sell a little bit into it. But it starts breaking down, and what are the execution traders thinking? The execution traders at a hedge fund are paid a bonus based on the quality of their execution. And so if you can be a seller, your VWAP, that's considered a good execution. But what's happening here? It's starting to run away from VWAP, right? So instead of waiting for it to bounce, they're saying, fuck. That's what they're saying. And so they got to get out as quickly as they can. And that's called execution with urgency. When you're willing to just hit bids, just get me out. I'm not going to wait for it to trade up at the offer price. Just get me out, get me out, get me out. And that's how you get this kind of waterfall. And they're doing it with some chunky positions. So when you see that going on in a short time frame, you can jump on board and quickly ride that puke. But it's telling you something about the balance between buyers and sellers. They just can't find buyers, and so they're getting rid of inventory. And that's how it shows up on a chart.
And it's run up a lot, right? I mean, it had that, Twitter's up a decent amount. 34 was a breakout area. It was in the 20s for a while, and Qs were exploding to the upside into the close. It still couldn't get above that 40. And so, could be people just locking in some profits from a really good trade that they made. Could be people that are still betting against Twitter. I mean, there was all that chatter. I mean, it went up to 40, and you start to hear the chatter about how this was a takeover target, had trouble there. Really good move for the stock overall, and can't get above the price. And the Qs are going up, and it can't really get above 40. And that just has that weakness. So, all right, thanks everyone.